What if I told you there was a simple formula that a renowned investor developed that has consistently produced over 30% annual returns for more than 20 years? Welcome to the Magic Formula, Joel Greenblatt's proven approach that can help ordinary investors like you and me obtain extraordinary results. In this video, I'm going to walk you through exactly how this formula works and why it beats the market year after year. You'll learn the two easy-to-calculate metrics that form the foundation of the Magic Formula, understand how to use it to pick winning stocks, and discover why it has confounded even professional money managers for decades. Whether you're a seasoned investor or just getting started, the insights from this formula can take your portfolio to the next level. Are you ready to unlock the magic and start picking big market-beating returns? Stick with me to the end of this video to master Greenblatt's proven approach. The power of the Magic Formula is real. Let's discover how it works together. Understanding the two key metrics. At the heart of the Magic Formula are two fundamental metrics: earnings yield and return on capital. Joel Greenblatt discovered that combining these two measurements into a ranking system could identify stocks poised to outperform the market. Here's a quick overview of what each one tells us. Earnings yield. This calculates how much a company earns relative to its share price. It's similar to the inverse of the price to earnings, or PE ratio. A high earnings yield means the stock is undervalued compared to its earnings power. Return on capital measures how efficiently a company generates profits from its assets and capital. Strong returns on capital indicate an efficient operation with a sustainable competitive advantage. Greenblatt found that buying stocks with a high earnings yield and a high return on capital resulted in exceptional returns over time. The Magic Formula ranks all stocks according to these two factors and looks for companies in the top ranks of both metrics. Ranking stocks with the Magic Formula. Now let's walk through exactly how the Magic Formula ranking system works in practice. Step 1. Calculate the earnings yield and return on capital for every stock under consideration. Step 2. Rank the stocks from highest to lowest based on earnings yield. Assign each stock a score corresponding to its ranking. Step 3. Do the same ranking process for return on capital. Step 4. Add up the individual scores from steps 2 and 3 to get a combined ranking. The lower the score, the higher the ranking. Step 5. Invest in the 20-30 highest-ranked stocks, rebalancing the portfolio annually. This straightforward quantitative process eliminates human emotion and bias from stock picking. By sticking to the formula rankings, investors let the magic work for them. Real-world results. You might be wondering, does this investing formula actually work in the real world? The results speak for themselves. From 1988 to 2004, a $10,000 portfolio based on Greenblatt's Magic Formula grew to over $500,000, averaging annual returns of over 30%. This completely trounced the S&P 500, which returned just 12.4% annually over the same time frame. Greenblatt also beat legendary investors like Warren Buffett and George Soros using this simple formula. Since then, the Magic Formula has continued to generate consistent market-beating returns, proving the durability of concentrating on earnings power and capital efficiency. Why it works. But why does this combination of earnings, yield, and return on capital lead to such strong returns? There are a few key reasons. It identifies quality companies with a strong, enduring competitive advantage. The high returns on capital indicate a successful business. It uncovers undervalued stocks whose prices don't yet reflect their full earnings potential. The earnings yield shows stocks the market has mispriced. It eliminates emotion and speculation from the investing process through quantitative rankings. There's no bias in the formula. Rebalancing the portfolio annually ensures money is shifted towards newly attractive stocks. The formula is continually optimized. The beauty lies in the simplicity. Rather than complex models or predictions, the magic formula focuses on core business fundamentals and valuation. Implementation tips. If you want to implement the magic formula for your own investing, here are some key tips to keep in mind. Use a broad universe of stocks, such as the S&P 500 or Russell 3000. More stocks mean more potential winners. Make sure the financial data is accurate. Errors can throw off the rankings. Use automated tools to screen for errors. Stick to mid and large cap stocks. Liquidity is important for rebalancing. Reinvest dividends to allow compounding to work its magic. Hold a diversified basket of 20-30 stocks to minimize stock-specific risks. Give it time. The formula works over multi-year periods, not months. Patience pays off. Follow these guidelines and the magic formula can transform your portfolio. Common concerns. When learning about the magic formula, investors often have some common questions. Let's address a few of them here. Does it still work? Short answer, yes. Extensive backtesting shows the magic formula continues to deliver outsized returns in today's market. The focus on fundamentals doesn't go out of style. What about other factors like growth? Greenblatt found earnings yield and return on capital had the most explanatory power. Additional factors did not significantly improve performance. Do prices become inflated? Some stocks may appear overvalued, but the yearly rebalancing ensures capital is allocated to new opportunities. The evidence clearly shows that the magic formula's conceptual simplicity and empirical results override these concerns. The magic lives on. Magic formula portfolios. If you don't have time to implement the formula yourself, there are some great magic formula investing portfolios that do the work for you. The magic formula. Investing website itself offers turnkey screened portfolios. Motif Investing has a magic formula pie you can invest in. Compass Wealth Management and Valadia both offer magic formula ETFs, stocks picked using the approach. These products provide easy access for investors to harness the power of Joel Greenblatt's time-tested formula. The takeaway. So in summary, here are the key points about Joel Greenblatt's magic investing formula. It combines earnings, yield, and return on capital into a stock ranking system. This system generated over 30% annual returns for 17 straight years, crushing the market. The formula identifies undervalued, high-quality companies. It removes human emotion and bias from the investing process. Simple to implement, it focuses on business fundamentals. Rebalancing and diversification are key to successful results. The magic formula proves that uncomplicated investing strategies can produce extraordinary results. While past performance doesn't guarantee future results, the principles behind this method remain sound. So don't overcomplicate your stock picking. Keep it simple, stick to the formula, and let the magic of smart quantitative investing work for you. I hope you enjoyed this overview explaining how Joel Greenblatt's famous magic formula really works and the impressive results it has achieved. Let me know if you have any other questions. If you found this video helpful, please like, share, and subscribe for more investing insights. Thank you for watching, and I wish you the best of luck unlocking the magic in your own portfolio.